Hey everybody, Christopher K. Smith. It's my FibLines quarterly update for December 27th, 2019, and I'm happy to say that I've been doing the FibLines for about 3 years now, and this is my 21st consecutive quarterly update. So it's going strong. I'm enjoying it, and I hope you're enjoying it too. So what is FibLines? Well, it's an indicator that you can add to basically any chart, and you start it in Thinkorswim. This is a chart of Vertex Pharmaceuticals. You grab this little item down here, little percent sign, and you basically pick 2 points in the chart, a high and a low. And when you do that, the Fibonacci extensions indicator draws lines at 100%, which is the original move that you selected, 161%, 261%, and 423, which are numbers in the Fibonacci sequence. And if you're not familiar with Fibonacci, it's a mathematical sequence based on a 13th century Italian mathematician. It has to do with the rate that rabbits will multiply, of all things. But anyway, look that up. And so anyway, what this has to do with stock trading is once you put these lines in the chart, you'll notice some very interesting things, specifically that you get points of support and resistance at these lines based on this original number that was based on this original range that was picked down here. So it's part preset calculation, and it's also part art in the sense that the analyst has to pick these lines for each symbol. So the FibLines indicator itself takes this concept and turns it into an indicator in Thinkorswim. So when you add FibLines to the chart, you will see that the indicator draws the lines on the chart for you. And here we go, anytime now. And there it is. So now I can remove the original drawing I did. And you can see that the lines are now drawn at the 100, 161, 261, and 423, as well as the 684 and 1108. So in the case of Vertex Pharmaceuticals, this number, this sequence that was picked down here, which was between December of 2016 and March of 2017, this sequence actually projected into the future and influenced the value or the price of this stock well into the future. And you can see that we had this resistance right here at the 423 line. Then we came back and kind of bounced around. And that resistance at 423 later became support. And the stock went all the way up here now to sitting just below the 684 line. So the other thing you'll notice is that once the indicator also draws, subdivides the regions between the red lines with the yellow lines at Fibonacci values. I think it's 31.2 and 61.8, and then subdivides those lines further with these gray lines, and those sub-levels of lines also somehow provide levels of support and resistance. So the indicator is provided for about 120 different symbols. And I provide you the symbol list with the indicator over here on the left. You have all the big indicators in there. All the big ETFs and all the big stocks, Dow 30, NASDAQ 100, etc. So let's go through some changes for this quarterly release. First, the properties of the indicator, I had some unnecessary properties in there. They're no longer used. So the only 4 properties now are whether to draw all 4 of the lines. There is a 4th level of lines also that you can check. Chose level 4 lines if you're really doing some shorter term trading. You'll find sometimes those 4th level lines are points of support and resistance as well. Facebook's one that I did recently. You can see at the shorter term time frames that the levels, the lines are the same regardless of the level that you, the time scale that you look at the chart. In other words, the lines are at the same place on the weekly, daily, and intraday charts, and had some pretty good success with Facebook this past year. Some other changes, reworked General Electric GE. That's a long-time industrial, actually was the oldest continuous member of the Dow Jones 30, was recently kicked out. I think it was back in 2018. So reworked that one. General Electric's clearly coming back after a long period of decline. And I think it's rebuilding now. And I think I based the 0 to 100 based on a move that happened way back here in 2008. Was it 2008? Yeah. Anyway. The point is we're in recovery on General Electric. I don't have a position in it now, but I think it's in recovery mode. Walgreens Boots Alliance, reworked this one, and don't have a position in that. And okay, so things that I feel positive about in the future, positions I have for, first of all, it was not a great year for active traders. I had a rough year in my Tasty account, down slightly, up slightly in my Thinkorswim account, but did very well in my larger accounts that are asset allocated, up about 15% on all those. Actually did better in my company 401k managed program, close to 19.5% versus the ones that I manage up to only about 15%. So most of that was just based on passive moves in the indexes, so I can't really claim any brilliance on that. I did have a rough time with some of my picks. Took a bath on CGC, Canopy Growth. Also took a bath on iRobot, IRBT. So did pretty poorly on both of those. Could have done better loss control. What I did have a very good trade in, I still have a position, is CVS Pharmacy. This is a company that acquired Aetna, took on a lot of debt, picked it up down here in the mid 50s. It's now up to about 70, 75 right now. They're paying down debt and doing very well, so I do have a position in CVS going into 2020. Other stocks I'm in favor of right now, basically the theme is stocks that, since the market's made new all-time highs, stocks that have not yet followed up, or not yet followed suit in that regard. And one of them is Amazon, AMZN. Valuation's pretty high, but you'll notice that we had an all-time high up here in the 20, just above 2,000. Let me zoom back out. We had an all-time high back here in 2018, again in 2019, but the stock has not kept pace up until just very recently. Recently had a big breakout candle yesterday, so I expect Amazon to get up there to those all-time highs. I have a put credit spread in January on that, and a very small amount of long stock. PayPal, PYPL is another one. Has the markets made new all-time highs? PayPal hasn't kept pace, but I expect it will. It'll get back up to those highs once the earnings come in, which are due over here in end of January. And the other one was Facebook, that was Amazon, and I believe that was it. And CVS I already talked about. Okay, one other thing I've been playing around with, one of the things I found with my active trading, especially in Tasty in 2019, is that I was just kind of putting on calendars, putting on Iron Condor sort of just randomly, thinking I would make money, and I needed to put some better structure around that. So I bought a book called Trade Like Chuck by this guy named Chuck Hughes. Sometimes he advertises on CNBC, and he put together a pretty basic strategy based on, not a strategy, but kind of a rubric, a way to look at things through Keltner channels and moving average crossovers. So I put together a pretty simple indicator that uses his daily method. And essentially what it does is it does a 100-day price moving average exponential and a 50-day exponential moving average. And if the 50 days above the 100, it's in an uptrend. 50 days below the 100, it's in a downtrend. So that's pretty simple. Next, he adds the Keltner channels. So if stock's in an uptrend, you don't want to buy it unless it's below the lower Keltner channel, so that keeps you from buying in an overbought situation or selling in an oversold situation. And finally, I added one last twist, which is you need a close in the other direction. So the last thing you want to do is try to buy a stock that's in an uptrend, when it's had 3 consecutive up days. So you can see the way this indicator works. It looks for a move up after you've had a consecutive down day, or if it's above the upper channel and it's a move down, it looks for a move down after you've had a consecutive down day. So here's an example now. The stock's in a downtrend. Oopsie daisies. Stock's in a downtrend, but below the upper channel, and you've had a close up. Actually, that doesn't look right. It looks like a close down. All right, well, in any case, you can see it makes some pretty good picks, and it keeps you from getting into things on the, when they're overbought or oversold. So essentially, I've used this to put a position on yesterday in 3M, Triple M. And here you have a stock essentially in a downtrend, but above the Keltner channel, and you have a lower close. So I'm using that to put on option positions, trying to add a little more filtering rather than just put them on randomly. So that's basically it. So the other huge development we had here in 2019 was this: zero commissions. This is absolutely huge. This is the best thing to ever happen to active traders. We really are in the heyday of active trading right now, and we really owe it all to this gentleman right here, Charles Schwab. He's the one who really started discount brokerages back in the 80s. Before he came along, like commissions were like $75 to buy 100 shares of stock. It was kind of an old boys club. He really introduced discount brokerage. My first trading account was with Schwab. And then just recently, he cut commissions to zero in the Schwab brokerage, and then later announced his intentions to buy TD Ameritrade, which hopefully that's not going to have an effect on the Thinkorswim platform. But this is absolutely huge, and it really helps active traders in two ways. One is commissions just are no longer a factor. I mean, you could just trade without regard to that fictional cost of commissions. That's absolutely huge, and also the other brokers of course had to follow suit. E-Trade did, and TD. The other thing is this helps you scale into positions. So rather than having to, if you want to buy a share of Amazon, another share of Amazon, another share of Amazon, or something like that, you don't have to worry about paying that $5 commission every time. So it's absolutely huge in terms of scaling into positions over time, and I think it's going to be great for traders in the long run. So that's my quarterly update. Not a lot of changes in the FibLines indicator, but it's been a great year overall. Not great for active trading, but great for traders in general. And if you're interested in the FibLines indicator, you can get this up on the FibTools sell store at fibtools.sells.com. I have some other indicators up there. They're all free. Range bands for TradeStation, trend dashboard for Thinkorswim. The only thing that I charge for is the FibLines indicator itself, which does require interpretation. And with that, you get FibLines for about 120 symbols, Dow 30, NASDAQ 100, NASDAQ leftovers, sector spiders, dollar index. It's basically all in there. That's $99 for that, and you get 4 quarterly updates, 1 year of updates. So that's it. Thanks very much for watching, and go ahead and go up to the FibTools sell store, grab the indicator and any other freebies up there. And if you're interested in this Chuck Hughes Trend Trader system, give me a ring or drop me an email, and I'll send you the code, and you can play around with it. That's it. Thanks very much for watching. Have a great day and great trading in 2020.